Hello, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to the Markets Analysis Daily Show, where we look at what happened in the markets during the day and how we can plan for the better trade for the next day. And this is analysis for the expiry day tomorrow, October 28th, Thursday, 2021. And if you're not subscribed, please subscribe and share to your friends, colleagues, and everyone so that you all benefit. Thank you so much. And what was the day like? Like, it was selling pressure that we saw in both the indices, and tomorrow is a monthly expiry. Let's see what happened and what we can expect tomorrow. This is for October 28th, Thursday, expiry day. And these are all the parameters that you see on the left side. Look at the charts, and you have data analysis and open interest volatility, institutional participation, sectorial watch, and global commodities, and then wrap-ups and actionables. Without wasting time, let's get into the price action. Yes, we had red candles, wide range red candles that you see in both the indices. Left BANKNIFTY, left is Nifty, and right is BANKNIFTY. Daily charts. That's nearly 0.5% down on Nifty, closing red, which will make me a high above the previous day's high. Right, it made a high, attempted to move up, did it the right way, a hammer bounce, and after that a green closing above and went up, but because of selling pressure came down and closed below the high of the below high and the close of the previous candle. So that's what happened. Bank Nifty nearly 1% it gave up. Right, it was bearish after 4 days of green mega moves of 1,500 points kind of moves. This is the first red candle today. Look at this. Right, so it seems to be consolidating. There is some kind of flag and pole pattern maybe forming. This is having more potential to move on the upside. We never know, but this definitely is consolidating because this is a very long candle and an inside bar and another inside bar. If you look at this, so it's kind of consolidating, you can say. Now intraday price action, if you see, it was flattish. Nifty was flattish, Bank Nifty was flattish till 2 p.m. to 15 p.m. After that, we gave up 100 points in Nifty, 300 points in Bank Nifty. Sudden fall. Look at this. Flat M pattern, flat, up, down, small mini V's, up, flattish, and then you see the big downfall, right? So it was consolidating like this, and then so after 2 p.m. there is big sell-off that probably Fyers saw that heavily at that time. So look at the support resistance, right? On that side you have the major resistance, which is there 18,350 levels, which it attempted close to that and then gave up. That's also a Fibonacci 36% retracement level and 50% retracement upside 18,650. The next resistance and above that. That 18,600 is an all-time high, and 650 is the 50% retracement of not retracement, 15% projection of Fibonacci. That 18,600 level is going in resistance second, and simple given 950. Downside you have previous swing low level of 18,000 levels, and below that you have 17,850, and below that you have 17,600 to 650, that range, and then you have Fibonacci 23 retracement also, that is at the 650 for 75 kind of level, 70, and below that you have the other levels of 15, 450, 500, that levels, right? Right side, Bank Nifty had hit a resistance upside 42,000 2 days back and then fallen down and consolidating. So now the upside first resistance would be the previous candle high or today's candle high, both of them are same, which is coming to nearly 41,200, 300 levels, and then that will be first resistance above that, 42,000. Then you have 43 above that. These are all Fibonacci extensions of 61, 51, 50. Right, so on the downside you have 40,000 and 40,200, which is solid up. There is a gap in between here, so that can act as support, right? Near to 40,500, there is a gap between this candle and this candle that can act as supports. Then below that you have 39,500 level is the previous swing lower level support, right? Below that you have 38,000. So this is Fibonacci 23 extension, right? So these are all the support resistance in Nifty and the Bank Nifty. Now momentum divergence on the weekly, we have a valid confirmed work in progress bearish momentum divergence. On the daily, momentum is intact till now. On Nifty and the Bank Nifty, both momentum has no issues. But there is divergence on the weekly. The week is going to end up tomorrow. Now trend indicators ADX is showing that there is a bend that has happened few days back, last week, and from then on it is falling. Trend is falling, candles, price is falling, both are falling. Now this ADX strength indicator has to take a turn upside. Only then we can say the trend is slowly changing to bullish. I'm saying until then, but DMI positive still bullish zones. That means trend is not broken. But look at the Bank Nifty. Trend strength is increasing and rising, although the DMI positive is slightly bent, but it is very far away from any crossover. So trend is clearly uptrend in Bank Nifty. That's why it's not fallen off. It has not given up too much in the last few days. It is just small 350 points is nothing has come to 1,500 kind of up move it made. So it's a consolidating forming inside bar. So trend is intact in Bank Nifty and rising, but trend is weak and strength is weak basically on the Nifty, right? Contrary to the Bank Nifty. The volatility VIX indicator is moved up slightly 0.5% and almost flattish 16.8 same levels. It's settled. IV is 16.5 and IVP is 39%, slightly dipped. So IVP has increased a lot from the VIX 10 kind of levels. So premiums are there, so benefits the option sellers when the IPP is rising up. Options analysis in the Nifty is seen on the left side and the Bank Nifty on the right side. You can see that the highest support or the put writing is seen at 18,000 for tomorrow, after that 18,200. So would it be 18,000 closing of 18,000 that going to happen in the monthly expiry for tomorrow? You never know. There is a good amount of resistance that can be seen at 18,300 and 18,500 also obviously have to do resistance. It could not sustain the 18,300 today and fall off due to selling pressure. So most likely it could be somewhere between 18,000 and 18,200 that expiry is going to happen. Futures build-up is showing a short build-up. That means there may be a struggle to hold the 18,200 or to hold the 18,000. I thought that's going to happen. Short build-up and PCR 0.69 is not bullish, so upside may not happen. Bank Nifty 40,000 and 41,000 is where the highest. The highest is at 40,000 put writing. Call writing is at 40,000 and 41,500 after that. So whether it would maintain 40,000 or maintain 41,000 is the question, right? If Nifty is going to fall and take the support and retest the previous swing low support, then 18,000 is going to be close at Nifty. That means Bank Nifty may be at 40,000. So 40,000 and 18,000 is most likely outcome that can happen if Nifty is not making any big moves, and then instead it may be slightly falling. If that is the case, this is where it's going to end up next expiring. Sectoral performance, if you see IT closed 1% up, but still momentum is sideways, so stay away. Metal is red with 0.5% down and momentum is still sideways, stay away. Auto is okay, so only sector is bullish, but today it went 0.5% down, but still managed to maintain the momentum, so it is cautiously bullish. Cautiously you can go long with tight stop loss because you don't know when the momentum is going to sustain. It's on the edge. Pharma regained nearly 1% and shot up today for some reason, 0.88%, but momentum is still here, so stay away. FMCG closed green, 0.5%, but momentum is still sideways and has to move further to pick up. Realty shot up today, so Realty and Auto did well today, means did okay. But Realty formed an indices it did not make gain. Magam was only 0.5% up, that's all. But momentum is still not, so stay away. So basically Auto is the only sector that is somewhere near to even any potential trade based on the momentum. So all other indexes are flat or down. You have to catch up in the momentum in the short term, right? So if you're going long or not, stay safe, stay with tight stop loss. Institutional participation, look at this, 27, another 2,000 crores, 1, 2, 3, 4, 5, 6, 7, right? Continuous 7 to 8 days of selling and very small amount of buying from domestic institutions. This is worrisome. Look at the dollar index, right? It has taken a bounce from the support region again, and then today it was kind of red. So the rupee has further weakened, and you see a green but further strengthened and is trying to not fall down into the channel once again, instead trying to rise further up above the 75. Right, so rupee is weakened. Crude oil is still about the 83 levels, but it is red today. So it is at multi-year high levels. Combined with the dollar strength, it's not good for Indian economy. Gold is going good today. Also seems to be a green hammer kind of thing at the top of the channel, and it is bullish, and this is part of a cup and handle of the cup on a weekly basis. So that's bullish there. Now, yeah, now the Dow Jones and the Nasdaq and all that shows some kind of slight green, no big mega down move or up. We've seen the now European markets also all flat or slightly green or slightly red. So no major clues, cues are coming out from this European market, but this has to be checked before the pre-market tomorrow. And same would reflect in the STFs also, according to how the European markets and the global markets perform. Accordingly, you have to understand this information also. Actionables, if you see Tata Motors is having a triangular breakout, and there's a big gap support here, and then this is a flag and pole. This have good potential of breaking on the upside, so that's a good pick for a swinger positioning. Tech Mahindra is doing good, and results are also good, but some kind of selling pressure is there. But it had a W pattern breakout several weeks back, and it did correct a little bit also, and now it is above a previous major resistance zone, and there is a potential that it can go up. The momentum is good, and volumes are also above average, if you see. And this seems to be a range shift of the momentum from the sideways into the bullish zone, and it may sustain further like it had done earlier. So further up move can be experienced in this bullish swing trade, not in trade. So the wrap up for this week is that mildly bearish in the short term. Reasons: institutional selling is heavy for some reason. The selling pressure is seen today in the chart also. Just one green day yesterday, and after that again the candles are turning red. Selling pressure is seen on the Nifty clearly. Banks do not support, but it's consolidating, and then probably it may give a breakout. But until then, there is some kind of bearishness that is there. Slight short term, very short term bearishness, and profit booking can come at this area from the institutional side also. Definitely selling pressure, and long term players such as all these people can book their profits at this high levels. They don't take risk unnecessarily at this all time high level. So that is the markets has scope for corrections. Expiry day volatility to maintain the levels of option sellers, that pressure and volatile gamma moves are all can be expected. So there is another reason for the bearishness. And now why only mildly bearish? Why not fully? Because Nifty bounce is not nullified. It's still valid. The previous bounce from the support level is good. Momentum is intact. Trend is intact. Bank Nifty is still bullish and is consolidating for a breakout. So the reasons why there is a chance that Nifty can again move, but not. My only thing is it may not immediately happen. Right. So there may be some kind of consolidation that may happen for a couple of days. Quarterly analysts can still cheer up, and then it can move further. So these are the reasons why it's mild. Why I am bearish also is written in the first 3 points, 4 points, and the other 2 points will explain why it is only mild and not fully bearish. Now the last 2 points are all the volatility. It's just to remind to option sellers that volatility is forming a range between 20 and 15, and it is cooling off and then moving up and inverting and then again cooling off and moving up, and so this is happening. It seems to be forming that range, and then the choppiness is too much now because of the mixed moves. but where positive strategies can benefit from this counter spreads, and never go for rate and naked calls, because bull call, bear call kind of vertical spreads can help a lot to escape from this big volatile reversal V-shaped moves and all that, right? So this is something I repeat every day for the option sell, the option traders point of view. So, right, so tomorrow is an expiry, so there will be unusual alternatives can be expected, right? Big moves can happen, so a lot of drama can happen on expiry day, especially monthly expiry day. So be careful. Hope this helps to form a view on your own, based on my view, and I also hope that it gives you make a good trade plan of yours, whichever instrument you're trading. So if you like it, consider hitting the like button and subscribe and share it with friends. And thank you so much. Thanks for watching, and happy trading and happy learning.